You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. Well, if you've made money in crypto and you managed to sell it before the latest sell-off and you're showing profits, then you got to figure out how much is Uncle Sam going to get? And are there strategies for crypto that can help you offset other income? And, well, there's a whole world of crypto taxation. And Micah Fraim is with us now. Micah, CPA, you're really into crypto. And hey, what do we do here? How do we minimize our tax burden? Or in some cases, how do we use the losses from crypto? Can you just use it to offset other investment gains? Or how does it work?
Where we always have to start is what kind of income are you generating? Because people think with crypto, same as they will with investment income or business income, they'll think, all right, this all goes in the same bucket. And a lot of times that's the case, but just like investment income, there's different categories on it. So if you've got a bunch of staking income or airdrops, that's taxed one way. If you've got mining or node income, that's taxed another way. You could be doing play to earn gaming, which is in its own category. And then you've got trading income. So first thing we always ask when we're consulting with clients is, tell me on a very granular level, what are you involved in and how much money are you making in each bucket? And then from there, that's where we start to formulate the tax strategies.
Okay. So for your average crypto investor, how does that work?
Yeah. So for most people, as you get deeper and deeper down the rabbit hole, you start getting into liquidity pools, nodes, all this stuff that has a lot higher earning potential, that's also riskier and harder to implement. So for your average crypto investor, most of them, you're going to have probably, I guess, would be three main categories of income. You're going to just have your regular trading, capital gains. You might have staking income. And then if you're depositing on a centralized exchange, a lot of those are paying interest on your deposits. Although that's gotten a lot riskier with Voyager and Celsius both declaring bankruptcy after Terra Luna crash. So, but those are the three main categories. And those are the good of those from a tax standpoint, is that that's very basic investment income for all intents and purposes. Staking and the interest are analogous to dividends and interest. And then when you're doing trading, that's the same as if you were trading stocks.
Is there long-term capital gains treatment for cryptos, or is it all ordinary?
Yeah. No, if you are trading and you hold it for more than a year, you get that same long-term capital gains treatment. The other thing that's interesting with crypto trading right now, and this will probably be closed in the next year to two, I'd say, but it's not subject to the wash sale rules.
Right.
So that's kind of an interesting, we're not financial advisors, but especially when financial advisors are planning with their clients on tax loss harvesting, you've got to be careful, and you've got sort of these conflicting goals of harvesting the loss, but not losing out on the market exposure if things go up. With crypto, you can sell your whole bag and buy it back a minute later, but you've realized the loss, at least as the laws and rules are written now.
All right. So wash sales are like you have a stock, you own shares in it, you've got a loss, you sell it, so you get the loss, but then there's a time limitation when you can hop back in that stock. And so what is that normally, the wash sale?
You have to, it's 30 days. So I think it's either on the 30 or 31st day that you can buy the stock back and it not be disallowed under the wash sale rules.
Right.
So
crypto, we don't have
we don't have to worry about that, which is one of the, during this bear market, that's one of the main strategies that we're looking at. And it's also there are other strategies for more advanced crypto investors, but loss harvesting is applicable to pretty much if you own crypto, pretty much you can utilize it, assuming the loss is big enough to offset the transaction fees.
So if we if we set up a hedge, a spread in crypto where we're buying crypto and selling it at the same time, all right, I can get losses without really getting any losses, sell off the losing position, reopen it virtually instantaneously, so I can generate unlimited numbers of losses with my crypto portfolio, can I?
Depending on how you structure it, yeah, you at least don't have the wash sale limitations on it the way you would with traditional investing.
So if I buy cryptos and I'm selling a future, okay, so I'm selling it short in the futures market, buying it long, I could actually do both. Do a spread and then close the position, or rather sell off the losing end of that position and then buy it back instantaneously. And I got a loss instantaneously there, right?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Depending on the specifics of that derivative, yeah.
Oh my God. This is what they have effectively done without knowing it. And I go back a few years. I got a few years on you. There was a thing called the commodity straddle, and you do spreads in commodities. You'd sell off the losing leg of the spread, buy it back right away, and you could do this to generate virtually unlimited losses.
Yeah.
All right.
When did they get rid of that? I'm not familiar with that one. Okay.
Yeah, they made straddles illegal, but crypto straddles is the new way. I guess they'll have to get rid of that now that we've mentioned it here for the first time, as far as I know, Micah, that no one's ever mentioned this before.
That's not something I've discussed on any interview before. Yeah, so I think you're the first one who's brought that up. Mm-hmm. But that's what's fascinating. Part of the reason we love crypto and crypto taxes is the same reason it's a nightmare for your average crypto investor, is that there's no rule. I say no rules, but there's practically no rules out there, because the IRS has only issued guidance on like 5 or 6 things. They've issued guidance on that mining income is business income, coin for coin trades are taxable. You can't do 1031 exchanges on cryptocurrency.
Right.
That hard forks and airdrops are taxable income. And like one other main category they've addressed, but staking, NFTs, nodes, these things that now are sort of ubiquitous and everywhere and are huge money, there's no guidance on them at all. So that the good and the bad of the space is that there's a lot of flexibility and a lot of room for interpretation. Problem ends up being is that people will take that to one extreme or the other in their tax planning.
What's the point if you're not going to take it to an extreme?
Yeah.
I mean, look, this is cryptos the way they're currently, and it's legal, currently regulated, taxed. They've created this humongous loophole. Mm-hmm. And, why shouldn't you take advantage of it? As Judge Learned Hand once said, you don't have a duty to the country as a citizen to pay the highest possible marginal tax rate. In fact, it's the opposite. Your duty as a law-abiding citizen is to minimize your taxable income through whatever legal means are available to you. And I stress legal. And right now, this is legal.
Yeah, it's legal. And there's no even as they're starting to come out with proposed rules and regulations, you're just seeing where they're only thinking like one step ahead and not seeing the ways that people could to twist things. Like one example is there's a proposed bill right now. Well, if you buy something with your crypto, and that's happening more and more now that people have these crypto debit cards. If you spend money with your crypto, that's an exchange of property, and that's a taxable event. You've either got a capital gain or a capital loss, no matter how small that transaction is. That gets to be a nightmare. You go to Starbucks, you swipe your card, and then you've got a capital gain to report. So what some people in Congress have suggested is that for transactions under $200, they'd be exempt from this capital gains treatment. You don't have to report it. And that's awesome, assuming people don't abuse it. Because what I can see happening pretty immediately is someone's got $1 million worth of Bitcoin that they've got very low cost basis in, and then they're just going to sell it $200 at a time to avoid the capital gain. They're going to have to do, even as they come up with these regulations, I think it's going to take multiple iterations for them to close all these loopholes or at least gray areas that are existing right now.
Well, I find it all really fascinating. So how did you wind up getting into the crypto taxation space?
Well, I bought some, like everybody else. In 2017, I bought a little bit of crypto during the ICO craze. The $3,000 I bought turned into $1,000 real quickly, and I just forgot about it. Then the market had recovered. It was somewhere around $6,000 to $9,000. And I found a project that I really liked. It was the first time I understood the use case and the utility of a specific crypto project. So that was sort of what got me involved in it. Then I'd start looking at other areas just as an investor and a user, and very quickly realized that no one understands the tax side. Like if you Google crypto CPA or NFT CPA or tax attorney or anything, it's a short list. And even among those who market it, what we're finding is that a lot of them aren't crypto users, which it's hard to explain if you're not in crypto. But the little nuances of the mechanics of how these projects work, at least under the current regulation, the mechanics can make a huge difference on how things are taxed.
Yes.
So that's kind of what happened. Is I got into crypto as a hobby and very quickly realized that first, just to fix my own taxes and plan for that, but also we've got a bunch of online businesses. That's my main niche outside of this. And since they're all sort of tech savvy people, all of them are getting into crypto too. And to serve them, I needed to understand the rules. And a couple of years later, here we are. And this is most of what I do now.
I love it. All right. Well, hey, it's been great having you on. We're going to definitely have you on again, especially as we get closer to tax day.
Yeah, that'd be great.
Micah, just tell us how we find you, how we connect with you on the web.
Yeah. So if you're a crypto investor, the easiest way is if you go to cryptotaxcpa.com. That's our website with our blog and all the information. You can also find me on Twitter at framecpa.com. And those are the two easiest ways usually.
All right. Excellent. Hey, I'm curious about you people out there, what you're doing with your crypto profits, how you're using the tax laws to your benefit, and whether or not you see what Micah's doing can really help you lower income. So why don't you send me an email, kl@kerrylutz.com. Tell me how it's working out for you. And if you got a question for Micah, shoot me an email as well, kl@kerrylutz.com, and we'll get you an answer. Micah, been a pleasure. Thanks for opening our eyes.
Thanks for having me, man. Appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.